Today we want to look at bank reconciliations and prepared and presented by Mr. James. First, we want to look at what the cash book used to be. Right. Okay, so this is what our two-column cash book used to be. And this the column that we are focusing on is the bank column here, this column. And this column here. So when you're doing a bank reconciliation column, statement, you ignore the cash column because that money does not go down to the bank. What you are reconciling is this cash book that you have here with your bank statement. Your bank statement will look something like this. You have a column for withdrawals and a column for deposits of money. Okay, and a column for details and the date. Right, every month or so, your bank will send you a statement once you have a checking account at the bank, and you can check your balance. You check it against your cash book. Okay, this cash book here is showing you the bank columns only, right? It's not showing you the cash column. So that cash book is showing you just this column and this column here, right? So these are the two items that we need to do a bank reconciliation statement. Now, what happens is the bank keeps their record here, this bank statement, and we keep our record here. And when bank send us a statement like this, you will notice that the balance here is different from the balance here. Okay, this is saying that we have our cash book saying that we have $600 at the bank, and the bank is saying we only have 330. All right, and we will wonder why is that. Okay, what we do is we do the bank reconciliation to account for the difference between these two figures. Right? Could it be that the bank robbing us, or could it be that there are some other mistakes or some other items that we have accounted for? Okay. Now, there are two stages in doing a bank reconciliation. The first thing you have to do is update your cash book to the date of the bank statement. Okay. Right. And before you can update your cash book, you have to find what is the items that you don't have in your cash book that is recorded on the bank statement. Okay, one such item is usually bank charges. The bank charge gives you they charge a fee for keeping your account, and that fee is barely taken out of your bank statement and on your bank statement, and it would not have been in your cash book bank column until you receive the bank statement. Okay, so the way to go about it is to compare the cash book with the bank statement. Now, the first difference you would notice is the things that you have in the debit column here is right usually shows up in the credit column here. And the reason for that is that when you send money down to the bank, that's what a deposit is, okay? You debit it in your cash book because that's what you do for assets. It's an asset for you, right? But when the bank receives the money, it's a liability for them because they are owing you that money, okay? So they will have it in the credit column of your bank statement, and you will have it there. So in the debit column. So the bank statement will be an mirror image of your cash book. It should be a mirror image of your cash book. Okay. So back to updating the cash book. The way we go about it is we compare the cash book, the bank column, with the bank statement. So we're comparing the debit column with the credit column here, and the credit column with the debit column here. Okay. And first, we look at the balance brought down here, and we notice it has 250, and we see the balance here brought down here is also 250. So we tick that off. That will account for this first tick here. Okay. Next thing we have in this column is that we receive a check from P. Thomas for 100, and we would have deposited to the bank because we can't do anything else with it. We see here we have a check here for P. Thomas, 100. So we tick this off, and we will tick that off here. Then we have D. Jones, 190. We see we have that deposit here as well. All right. So we tick it off here. And we tick it off here. So all on this side, we know this side and is in the bank statement, right? We don't see this one, however, over here. So we know this is one of the items that causing our cash book balance of 320 to be different from the balance we have here, right? Okay, we go to the other side and we see S.J. Gordon, 65. That should be seen in this column here. Okay. Incidentally, on the credit side here, these are payments by check because on the credit side in the bank column, right? So we take the 65 here and we tick off the 65 here. Okay, notice that check here, the number, the note underneath here tells the serial numbers of the check paid out, right? Huge, so we tick off that and we check 175. We see it here, and so we tick off this and we tick off that. We are no more items in our bank statement. It's all, sorry, in our cash books to tick. So we realize now our bank statement has this 70 and this 50 that does not appear in our cash book, right? So if what we will do is take it and put it into our cash book here. right? So we put in the bank charges on the credit side because that's a payment, right? And we put in the credit transfer from P. Smith, Bank Gyro Credit P. Smith, 175, right? Oh, sorry, 50. 50 is the bank charges, 70, right? We write them into the cash book and we take them off there. So this here, notice it's in the credit column and we put it in the debit column here because it's supposed to be a mirror. This one was in the debit column, bank charges. We put it on the credit column here. And we balance this over and we get a balance of 320. So this is what was supposed to be in our cash book. Okay, so the bank had two transactions here that we didn't have in our cash book, right? What we would have done here is updated our cash book. Okay, now we will take this new balance that we have here, right? And we will compare it with the bank balance here. The bank has 320 here, and we have 320 here. If they are the same, then we have nothing to reconcile. You don't have to do a bank reconciliation. Okay, if they are not the same, then we have to do a bank reconciliation. Okay, so we look at another example where they turn out to be not the same, right? We have here, okay, so we're going to update this cash book to reflect where it differs from the bank statement, right? The bank statement shows 330, we have 600, so we need to clarify that, right? So the balance brought down, we check in this first is the same 320, 320, right? Then we're going to tick off the items in the debit column here with the credit column. Our Lumas 160. Once we tick off our 160 against our 160, we good, right? Then 140. So 140 against 140, and we have the 90, and we have the 90. Okay. On the other side, we have 110, and we have 110. The 90 and the 90. The 180 and the, sorry, the 180 and the 180. We don't have any other thing here again, right? So we have two items in our cash book unaccounted for that we cannot find here, right? And there are no items here that we don't have there. So we don't have anything to update the cash book with. Okay, so we can go straight into the bank reconciliation. The first step is done, right? Notice again, all the items on the bank statement are ticked off, meaning that they appear in our cash book. So we don't have anything to update the cash book with. Okay, so we go into the bank reconciliation statement. What we have here is our bank reconciliation statement, the format for it. We put it at the date. It's usually the last day of the bank statement here. Okay. On that date, we take the balance as we have in the cash book. We add any unpresented check. I'll explain what that means just now. Then we less any bank lodgement. Lodgement is just another word for deposit, and we should get the balance per bank statement. Okay, let's look back here and see. Right now, we said any payment on the any credit side is in the bank column is a payment, and it would be a payment by check, right? So with this here, we would have paid MPEC with a check of 200, and we're not seeing that on our bank statement, right? What that means is Mr. Peck here is still holding on to our check. He hasn't taken it to the bank yet to cash it, okay? And these checks are what you call unpresented checks, okay? And that is causing our cash book to show a bigger balance than our bank statement. As one of, sorry, a different balance from our bank statement, might not be a bigger one. On the other side, we see we have checks that we receive from our customers or people who pay us, right? And one of them that appearing here, we cannot account for it on the bank statement, right? For 470. Okay, so what this means is we will have banked this check and the bank didn't put it in our account yet. Okay, that is what is called bank lodgement not on statement. You could use the word deposit instead of lodgement, right? If you feel comfortable with that. But this is the word that CXC uses. Deposit is not incorrect because back on the side here, we have the word deposit, right? So I would suggest that whatever word the problem you are working on uses, use that, okay? So we'll call it deposit. So we have this here. We only have one of each. If we had more than one check, say, unpresented, what we'll do is we'll list all of them here and add them together and get this figure. In this case, is only 200, right? And we only have one deposit of 470. So we take the cash book balance of 600, and we add the 200, we'll get 800. And from that, we minus the amount in the bank, and we get 330. This here supposed to equal what we have in the bank statement. When we check it here, we'll see that that is so, right? Okay, so what we have done there is reconcile our bank statement. Okay, now this is the format for it. It's always the same, balance per cash book. This is the balance after you have updated the cash book, right? And then you add the unpresented checks. You may have more than one check. You can list them across or downwards, add them and put the total across here. And same thing with the bank deposits. If you have more than one, you can either list them going across here or add them down, right? and put the total in there. But the formula or the format is the same all the time. Okay, you always add back the unpresented check to the balance in the cash book, and you always minus the bank deposit in the, not on the statement, from the total here, and you get your bank balance. If perchance you do a bank reconciliation in an exam, right, and this figure does not agree with the bank statement, don't go looking for it, right? Once your procedure is correct, you will get the mark, right? And you're adding on the unpresented checks and you're minusing the um, deposits, you will get your marks, right? So don't go looking for it because you might not find it. Okay. So that's how you do a bank reconciliation statement. Okay. There's one thing we need to look at again. Sometimes businesses have what we call an overdraft. Overdraft means the balance here is on the credit side in our cash book, right? It means we are using the bank money, or we are owing the bank. Okay, the bank allows us to write checks like these on this side here, without having money at the bank. Okay, so we are owing the bank. That's what a bank overdraft means. We are allowed by the bank, we have an agreement with them to write checks up to a certain amount that the bank will honor, although we do not have money at the bank. Okay, so in fact, we are owing the bank for this amount of money here to start with. Then we went and we write checks for this amount, and we deposit checks for this amount into the account, and we now owing the bank at the end of the month 380 here. Okay, so when that happens, your bank statement, which will give you balances like this here, you'll see OD after it. It means overdraft. All right, I mean your account is in credit, or okay, okay, or in the case of the bank statement, it's in debit. You are owing them the money. They are not owing you, as is the usual case. All right, now how do you do the bank reconciliation for a bank overdraft? Simple. When you get to this point, you will have here overdraft, and you put it in brackets and you treat it as a negative figure. Okay, that's all. So when you have, this would be minus 380, add unpresented check of 63. So you'll get a smaller minus figure. You would not get a bigger minus figure, right? And then we minus, as usual, less the bank lodgement, not enter in the statement. So the normal thing, but remember the figure coming from the overdraft in your cash book is a negative figure. Okay, when you get here, it will be a negative and a negative. So you will add them on. Okay. So it might look a little confusing, but it is following the normal rules of maths.